Hello friends, welcome back to my channel. I will appreciate the viewers to subscribe to my YouTube channel if you like my content. Good news so far over the last 2 weeks for Hong Kong market and Chinese tech stocks are that there are no massive lockdowns in Shanghai, Beijing and other major cities. If we take a look at the COVID cases in Shanghai over the last 30 days, the new cases are coming down. So is the Beijing cases. This shows that the cases in terms of COVID cases are under control right now. The question to think through right now is that are there too many stringent measures that compromise China's economy in 2022 and going forward into 2023? Also, will the upcoming key political meeting in October 2022 lead to any uncertainties that can cause a plunge in China's stock market as well as Hong Kong stock market? This is something that I will be concerned about. In fact, I have one Twitter follower who told me that he will close his positions in Hong Kong market before October 2022. This could be weighing on the mind of many investors who are concerned about the uncertainties leading up to October 2022. But worries aside, Hang Seng Tech Index remains range-bound from 4,400 points to 4,826 points, which though show initial weakness when there are worries for lockdown in China, but it did remain mostly above 4,500 points, a critical price point that I have been watching very closely. As for Hang Seng Index, it has remained above 20,700 points so far during days of weakness. My best read of the market right now is that I'm still more positive towards owning Chinese tech stocks and that I would consider loading shares in Chinese tech stocks as long as the price isn't too rich on a forward-looking basis and that China does not do very stringent COVID lockdown. This means we must have a sense of what the earnings may potentially look like under a normalized economic set of conditions when China starts to live with COVID just like the rest of the world like Singapore, US, and Europe. For people who do not want to be exposed to individual stock risks, could consider exchange-traded funds ETF like iShares Hang Seng Tech ETF, which is an ETF product managed by BlackRock that seeks to replicate the performance of Hang Seng Tech Index. Xiaomi still has its own issues to resolve, that is for them to reach a settlement with Indian tax authorities on Indian tax authorities' allegations against Xiaomi India. Should this be resolved in favor of Xiaomi, this could remove one key element of uncertainty for Xiaomi and should bring Xiaomi back above 12 Hong Kong dollars strongly. Nevertheless, Xiaomi still has to solve its own chips problems, which resulted in lower sales of its handphones in 4Q 2021 and 1Q 2022. But the good news is that I have seen SMIC and TSMC and Samsung Electronics forecasting weak demand for chips for smartphone. This could resolve the chip shortage problem for Xiaomi into Q 2022 and second half of 2022. But the next question is then, could Xiaomi be managed to able to get more sales despite a poorer macro environment for the smartphone sales? The question to ask is, can Xiaomi win more market share from other competitors like Apple, Samsung, Honor, Vivo, and Oppo? Baidu Hong Kong shares should remain its uptrend as long as it can hold above 136 Hong Kong dollar. This is a stock that I am very interested to acquire, though one should know that it is not cheap, but there is an immense potential in the long run given its investment in AI, cloud, EV, and mobile ecosystem. As for NetEase, given the recent share price development post the news update on the delay in game launch in China with Activision, it would be best for me to stay out of it until the share price stabilizes and the pricing becomes even cheaper, because right now, after the share price plunge, it's still fairly rich, but it's an interesting company to continue to monitor and put on one watch list. As always, this should not be construed as any investment or trading advice. Thank you.